We've got Mr. Addepalli Krishna Sai Kumar, who's director at Apollo Microsystems, joining us today. Mr. Sai Kumar, thanks so much for taking the time and pleasure speaking with you. Give us a sense of what contributed to this 70% up move in revenue and whether or not the mix changing had a bearing on the margin contraction that you saw.
No, the mix change is not the bearing of the margin contraction. Actually, this is a consolidation figure. It's not a standalone figure. The standalone figures are still robust. You can have a keen eye on that as well. So we have been communicating very clearly that in the consolidated there could be a small shrinkage in the margin contraction owing to ideal explosives consolidation happening. So in the last quarter we had a 45-day period of consolidation which took place as the marking date was on 16th November up to 31st December. That actually added. But otherwise, you can see the overall net profit. We maintained it a very, very decent and robust levels. Continued onto it actually. So this is something which is expected of the consolidation once it takes place. This is going to have
Mr. Kumar, just for our understanding, what exactly is this consolidation and this marking day, which you're saying has impacted margins? If you can just explain for our viewers as well, and those who maybe don't understand your industry entirely.
Exactly. We acquired Ideal Explosives Limited few months back.
Okay.
And the consolidation date started from 16th November onwards actually. Okay. So it's the overall consolidation is only for the 45-day period in the last quarter actually. So that's the
adjustments. So just to understand, the adjustments post your acquisition is what has led to the margin compression.
Absolutely, yeah.
Okay, let me just ask you a bit about this acquisition because this was exciting. It's a step down arm now of the company and manufactures bulk explosives for mining and infra. How do you think that this is going to add to your balance sheet and to what you have to offer? What is the strategic positives of this acquisition?
Ideal Explosives we have acquired, so that it will be a backward integration for us. We are bringing in the high energy military explosives manufacturing also into this company. So going forward, currently we are outsourcing this explosives and propellant, manufacturing to other companies, and some of them we are tied up with Munitions India Limited also. But presently going forward, there are bulk orders expected for our anti-submarine warfare rockets, for our aerial bombs, for underwater mines, limpet mines, mood mines, and there are several other programs, which we are doing, for which all the explosives and the propellant requirements will be manufactured in Ideal Explosives. That was the intention behind acquisition of this particular company actually.
Mr. Sai Kumar, I'm sure that my colleagues will want to delve into some of the details of the P&L, but my eyes on the trajectory of ROCE that looks pretty robust, heading from FY21 where it was 9% or 8% in FY22 to 12% in FY25. I'm wondering where the target is in what FY26, 27 is going to look like. Does it improve further in your opinion?
Should be.
Sir, that's a two-word answer. if you can spell that out for me, and what is going to contribute to it, and where do you see it going?
Yeah, see, the return on equity and return on ROCE figures. These are certain things. They vary based on the continual corporate actions that we are taking from time to time. But broadly, I would say that the rate at which the CAGR rate at which the revenues are growing, okay, definitely it is going to have an huge improvement in the all these figures as well actually.
Mr. Kumar, good morning. Neeraj here. The first 31 pages of the presentation are talking about defense products. You are really going big on this. Is this all catering to the domestic market, or is exports going to become or already become a significant part of your portfolio?
Exports are going to be a very significant part. We are going very strong with our munitions as well as a complete weapon systems manufacturing. The requisite business development has been aggressive for the last couple of years. and we are almost in the verge of making a breakthrough in very shortly in next 1.5 quarters. That's what I'm expecting of actually.
Through in your export ordering, you mean, or in your product, you mean?
Absolutely.
In the
Exporting
export.
exporting my products. Yeah.
In
yeah.
exporting your product. Okay. So where would the, let's say, the 9-month number or the assumed FY26 export share be? And where do you think it will be, let's say, in FY28?
Currently, the exports are not much. Rather, in this financial, it's not going to be anything significant. But in the next financial year, our exports are going to pick. But in terms of the revenue, the earlier guidance we have given 45 to 50%. That's something that we are going to maintain in this financial year. Whatever guidance we have given.
I missed the number. You believe what it will become in FY28, sir?
FY28, at least, with a growth rate of, on a standalone basis, if I make a growth rate of 45% continued in next financial year as well, in which minimum 10% contribution will be there
from exports. Okay. And console numbers, you think you will do about 45-50% of growth? Because your multiples are so high that the street will probably expect you to deliver at least that 40-45-50% kind of growth.
In the console level, next financial year, also in the console level, there will be a growth of minimum 25 to 30%, growth. Standalone basis, 45% growth will definitely be there actually. But we are still in the process of, complete, although the acquisition technically is complete, understanding that this thing and all. We are trying to increase our export revenue in the consolidated business where Ideal currently is our, the only subsidiary, which is making revenue. But going forward, before end of March, we are going to make at least 1 or 2 acquisitions more, where the revenues further are kicking. And one of the company whom we are eyeing in advanced stage of due diligence, that is something which is already having some exports. So that's further going to give advantage both in terms of exports and consolidated business. But the revenue also, in a very conservative base, I can say on a consolidated basis, at least I will still continue to grow 25 to 35%.
Sai Kumar, just on that last point, you're saying advanced stages of due diligence. Does this get completed in the 4th quarter itself?
I'm expecting of the counterpart continues to extend a single support.
Okay, so from that perspective, what is the addition potentially to the top line, and will you have a similar situation where you had the acquisition in the 3rd quarter? There was a little bit of, a settling in, if you can call it that. Does that take place for this acquisition as well? Is it a large material acquisition?
One of the acquisition is not a large material. One of the material is a, decently a medium-sized, low medium-sized acquisition actually.
Okay. And how is this going to be funded, sir? Is it going to be funded through internal accruals?
Yeah, partly through internal accruals, partly the promoter is going to be, because this is an acquisition which we are going to do from the subsidiary. So that's how it will be done.
So will there be any requirement of an infusion at all by
there
promoters?
Are funds available in place.
Okay.
The funds available in place, the promoters will be putting it at an appropriate time.
Understood. Understood. Okay, so we look forward. It sounds like an exciting time for you, Mr. Sai Kumar, and for Apollo Micro as well. We look forward to speaking to you again once these deals get announced, and of course, to look at the numbers once the 4th quarter numbers come through as well.
Thank you so much. Have a nice day.
You too, sir.